Everyone's wondering, we've had a nice rally here in July, best month of the year. Is it a bear market bounce or the bottom?
I think it's a bear market bounce, Sarah. I think the bottom is probably a ways off. I went back and looked at going back to World War II at all one-day advances of 2.8% or more as we got last Tuesday, and found that a majority of them, 2/3, were in bear markets. And within those bear markets, essentially 3 out of every 4 of these 2.8% bounces or greater were well before the bottom was put in place. And actually, the average was about 5 months ahead of that eventual bottom. So eventually, we will get a nice bounce that could top us back into a bull market mode. But I think right now, the early bounces really are simply bear market bounces.
And the other question is, what about technology? Because that's what we've seen showing some strength over the past few weeks, especially over last week. We're going to get a lot of earnings. Today's a day where they're underperforming energy, financials, industrials. It's more value over growth. Which do you prefer?
Well, I think for the near term, I would prefer more value over growth. We've been seeing weakness in the growth areas for communication services and consumer discretionary really on a relative basis since fourth quarter of last year. Technology in the first quarter, it began to underperform the overall marketplace and still just sort of bouncing around here. So I would tend to say that in these challenging periods, third quarter of presidential election years that typically have 70% higher volatility, you want to be sticking with the defensive and, in many ways, the inflation hedge area.